feeling. I don't like that feeling. Like you're running around, things are all jiggling. It's not.
Bro, do you have any
Not a good
advice on how to not have to use the bathroom when you start running? Because like
Oh,
I'm struggling with it. It's so annoying when I'm running and I have to use the bathroom and I have to stop running. Like it's the worst thing in the world.
eventually you'll get used to that.
Chris, you're muted, I think.
Eventually you'll get used to that. Like you're saying like you're drinking a lot of water while you're running, and then you constantly have to.
No, bro. Like I gotta take a shit when I'm running. Like,
Oh, you gotta take a shit. Oh, I
it's
don't know
so
what you're
annoying,
eating.
bro.
It's all that
And I'll run
tandoori
faster,
chicken.
and then I'll have to slow down because I gotta take a shit more. Like,
Well, that's different. Yeah, you're not gonna get used to that. I mean,
Isn't that
but
you want all that shit just sitting in your stomach?
yeah, you
know,
get
dude,
lighter,
that's
dude. It's
amazing.
that's your fight or flight mechanism kicking in.
oh my
Yep.
god, it's so annoying, bro. I've run 6 days a week this whole week, and like actually started like I started really using that gym subscription this week, so it's been fun. I feel my chest getting back to normal. My arms are hurting the right way. Like it's really exciting. So.
I was feeling a little bit squishy this week, and now I'm just feeling everything up here is all tight. It feels good. Hold on, my camera fucked up. Oh, there we go.
Yeah, you're good.
Yeah, everything up here is all tight. Here, all around here, like oh man. But it feels good. It's a good feeling.
I gotta get back into the zone of things, man. I've been slacking.
Yeah, bro. What's going on? You said when you get back from New York, like, come on, man, just go do
He's
it.
doing Disney DD, bro. He's busy.
I know I've been doing a lot of DD, but you know what? That's no excuse. I'm not gonna sit here and not be accountable for it and just try to blame other people. I blame myself for being.
You did kind of challenge me, and I was like, yo, let's do this.
I you know what? I'm getting back into it. Fuck this. I can't. I'm not gonna fucking die and not use my meta money. I am going to use my meta money.
Yeah, you can't work out in the metaverse. You gotta go in real life.
Yeah.
On that one.
Yeah.
So what do you guys want to talk about today? I have something that I've been researching, and I kind of like. I don't usually research short positions, but I think I got a good one.
All right. So first off, welcome everybody to the Sunday episode. This is on the
Where's
new
Vitaly?
channel. So, I don't know where Vitaly. He should be joining soon. So this is gonna be a really chill episode. Nothing too crazy. Obviously tomorrow we got some big earnings, so we'll be back on my channel to discuss it, 7 p.m. But yeah, today we're just
That's right. The gym rats. We changed the name to Gym Rat. They got Gym Rat Junkies, Swole Junkies.
Super chat is not available, David, because you can thank these two monkeys here.
Whoa. We're working on it. Okay.
It's not our fucking fault, man.
Regardless, thank you for the super chat. Even though you technically hasn't happened, you can hook us up next month,
right?
When Apple finally lets us out of jail or Google jail. Google jail, technically.
We're in Google jail. Well, Apple and Google, they conspired.
Vitaly, how was your weekend?
You made me stop it to do this pod just now.
Yeah, I was busy too. Can we leave it?
What were you doing? Were you at the
pool? I was out at the pool enjoying my time. We were barbecuing, and I'm like, I gotta fucking do this pod right now.
I was in the pool too.
I'm in the hot tub, naked.
And
this is
what you could have taken the day off. You could have been like, guys, I can't do it today.
No. He's got to get his daily fix. He complains about it, but he loves it.
He loves the attention.
He loves the attention. He absolutely loves it.
You guys don't know what I'm thinking, but okay.
Look at him. You guys can tell right now.
Okay.
Wait. What do you eat? You eat hot dogs or burgers more? What are you more of a fan of?
Actually, yesterday I had a big film party, so we wrapped New York Homicide. There was like 30 people from the actual show.
Wow.
They came over, the showrunner, the other camera people, the art department, everybody. They fucking loved it. They didn't want to leave. I was like, all right, guys, time to go.
So you cooked for them and you hosted them?
I cooked for like 3 hours, basically. We had burgers, we had wings, of course, hot dogs, standard stuff. Salads. My wife made special salads, which are nice. Pear salad. We're growing like actual vegetables in our vegetable garden, so tomatoes came from us, that kind of thing.
Nice.
Did your kids hang out downstairs, or did they just go on their iPad?
No, all the kids were playing. They actually kids were invited too. We have a trampoline. We have ping pong now. We've got a game called Milky. If nobody's played it, have you guys ever played Milky? It's like a Swedish game where it's like lawn bowling. It's kind of crazy. It's a white person thing. Don't worry about it. And we also.
I was gonna say I think I played a version of that with my wife, but I don't know.
It's a great game.
I don't know. I never knew it had a name.
Look it up. Look it on Amazon. It's actually a really cool game. You can play it anywhere. I also bought what are those called? Cornhole. So I finally.
Cornhole is.
Dude, I love cornhole, man.
Yeah. I know. I got a cornhole.
So Amit, you're invited because nobody else is coming. But this week you're coming to we're doing a jacuzzi freelancer finance, or we're doing a finance junkies one. What are we doing?
What, on Sunday?
No, this week. Weekday. We should do it on a weekday.
A weekday is hard, bro. It's gonna be hard to do it, but I'll see. Let me know.
All
Which
right, maybe
weekday.
Sunday.
Yeah. Wait, I just looked at New York Homicide TV. It has a 6.9 out of 10 on IMDb, which is really good.
For
For IMDb ratings, almost a 7 out of 10.
What I am? So you're saying this wrong.
IMDb.
The thing is,
IMDb.
women love those
Oh,
shows.
DB.
Like women love those shows. Any of those shows that show like real life homicide, murders, and like real cases.
How to Kill Your Husband, you know.
That's basically that makes you got the thing where your wife just starts accusing you of all this shit like that. She's like, I know what you would do now. You know, if you ever try to take me out. I watch those shows. I'm like, why do you watch all that stuff? They just eat it up.
Yeah,
You know what
it's actually doing well.
Paranoid.
It's actually doing
You know
well.
what-
So we're hoping
guys-
for. Hold on a second. I'm sorry. Hoping
Yeah.
for a season 3. I hope that does happen because season 2 just wrapped, but it's possible there's another season coming up.
You know what the worst is, and maybe Amit can confirm. It's Indian soap operas.
Oh, yeah.
Bro, Indian soap operas, like Indian women, dude, they will watch that shit to death. And then, like, my mom loved this show called Kusum, and basically Kusum's like the really good wife, and basically her husband is always like neglecting her,
Yup.
and sometimes cheating.
And then they'll
on
get
her.
ideas.
Yes, and then like they'll see patterns in their own marriage. Like, why is my husband not talking to me? Oh my God, he's cheating on me. I need to go out. And my dad is like, bro, I just work all the time. I don't really like. Naturally, I haven't spoken to you like in 15 years, and you expect me to change because you just watched the fucking TV show. You know, like and it's so funny because
Bro,
I think a lot of these dramas. Yeah,
my mom
Go
had it
ahead.
worse. She was on my YouTube premium account and she started binging relationship gurus who are basically telling women that their husbands are pieces of shit. And so for a month in my algorithm was just these women telling you how your husband's a piece of shit. And she's brainwashed. I mean, for good reason, because my dad's not the best. So I
He
love
is a
him,
piece
but
of shit.
their relationship's not the
Like,
best. Their
That's a
relationship's
bigger,
not the
that's a
best,
bigger
okay?
conversation.
She's not
you guys need
perfect
to have.
either, but you know.
Yeah.
And so,
Yeah.
you know, and then after a week, she'll forget about it when he fixes the fucking lawnmower or some shit. Like,
Yeah. Amit's dad's like, you got the dollar wrong. What the hell is wrong with you? Make more sugar in my tea next time. It's like, no. See, Amit won't even deny it. Look at it.
no, he's
'Cause, dude-
never laid a finger on her. It's just
Yeah.
they were never supposed to have an arranged marriage, bro. Like, I think she could have been picked with any other man on the planet and it would have been a better marriage.
Wait,
are
they
so
were
polar
a
opposites.
legit. They were. a
Oh
legit
damn! Thank God
arranged
your mom
marriage?
doesn't watch this podcast, huh?
They were a legit
Hopefully
arranged
never.
marriage. Like,
Yeah, they were legit. My mom got married at 22. I think my dad was 27, and they met for like 2 days, and then next thing you know, in 2 weeks they're getting married. And like, that shouldn't have. I shouldn't be here right now, bro. Like, if I could go back to 1992 and be like, no, don't do that.
Well,
because
here's a
they're
question.
polar opposites.
In the United States, 50% of marriages, just in general, divorce and in divorce. But in Indian marriages that are arranged, what's the divorce rate?
It's like less than 1%.
gotta be
because-
zero.
Because in India, the
Oh,
culture is
it
not.
seems like it works
Yeah.
out just fine.
Yeah,
but
I
in
guess
My
America,
parents like that
80% of those divorces are initiated by women, and if they're college educated, it's 90%.
wow.
Out of the 50%, you're saying.
So yeah, out of the 50%,
So
well, out of the
40%
of
or
all
whatever,
marriages.
45% of those are basically
Yeah.
initiated by.
So basically, the smarter they are, the more
Right.
they initiate divorce and take
Yeah.
it. Like the number one, like of all the millionaires, women that are millionaires, I think like 90% of them are for marriage.
Yeah. I have no doubt my parents love each other, but
That's my
it's
wife.
it didn't start. It
gonna
didn't
take-
start with that. It didn't start with love. It's all, you know what it is? It's mutual respect. Like, my mom will respect my dad for the sacrifices he's made, and my dad will like respect my mom for the tea that she made this morning. Like, that's how it is. You know, it's all like, Mina, go make the cha. And that's it. That's all that really matters to my dad. Like, as long as my mom makes food in the morning, he's happy. And when he doesn't get that, bro, he turns into a miserable fucking man.
Yeah, that's my thing.
Like, my dad, when my mom goes to India, dude, that is the worst time to be around my dad, because it's like, this dude can't do anything for himself, like nothing. He's literally been living off of my mom the entire time when it comes to like all the household domestic chores and everything. So
Chris, aren't you
you-
happy you have like a love marriage? Like, you actually like love your wife outside of. arranged
debatable.
Well,
It's a one-way street.
When did you meet her? When did you meet her? How old were you?
My wife 2016, so I was like 28, I think.
Okay,
But
that's
no,
not- that's not-
Next
that's not a
30,
bad
30,
time.
30.
All right.
No,
Well, then
you
you
know
had
what it is
fun.
with,
You did have your fun for 10 years. It's
When
when,
it- when it
you
comes-
didn't.
yeah.
It's when you didn't get a chance to have your fun. I think that's when
Yeah.
a guy would start to think, when you didn't get a chance to have your fun, and sort of see your market value.
She
Because like your
texted
market
you, didn't
value,
she?
your market value as a guy is it's so much more in your 30s, and for
Yeah.
women it's in their 20s. You know.
My wife and me, we love each other to death, but because of that love, it ends up being one of those things that it's almost like I can't even fucking be mad at her, and I hate that feeling that I'm so attached to another person. You know, it's just I don't know. I don't know how
love
you
that.
guys feel about it.
What happens is I think men do become more codependent on the women
Yeah.
after some time has passed, because in the beginning we're not, you know,
Mhm.
and time has passed. Like I clearly love my wife more than she loves me.
I don't think so. I don't.
I
think so.
can't
That's
stay
not
away
fair.
from her. Let me put it this way, and I'm sure all of us have the same thing where we just can't stay away. We got to grab some blow. We just got to be all around her all the time. And you know.
Sometimes I feel like Ricky Ricardo. Do you guys know about Ricky Ricardo and Lucy?
I've heard of them.
I've heard of Ricky, right? But you've just lost half the audience who are.
No, it's from
under-
I Love Lucy, that show, right?
Good. You actually know something. Good.
He looked it up real quick.
No, I didn't.
Yeah.
No, I didn't.
He's like,
Yeah,
Siri?
but you've never watched
Siri.
a single. You never watched a single episode of that show. You've never watched.
Bro, I used to on Nick at Night like a long time ago. I used to watch it. They used to pop up.
But are you gonna
I
say like,
love-
Ricky and Lucy used to sleep in separate beds, dude? That was the whole
So
thing. About,
what's
like,
your
how did they
Ricky
have a kid?
story? Why are you like Ricky?
Me and my wife sleep in different beds too. You know,
What?
I work at night. Yeah, my
Yeah,
wife
that's
works.
reasonable. That's reasonable. It
Yeah,
happens. a lot.
I work during the night, so I don't want to
no.
disturb her, right? And my wife is like super like light sleeper, so like I'll get out of bed and she'll be like, "What's going on, honey?" And me, I'm a deep sleeper. Like the World War III could be going outside because I'm from New York. New York, dude, we know like the sirens are always going off, so we've been naturally trained to that. Whereas my wife has grown up in like the quiet suburbs, so like anything will wake her up. So just to be on the like, you know, like give each other a good night of sleep. It's like, you know what, you sleep in this bed.
That's
We'll
real
start
kind of
off
you.
in the same bed. We'll start off in the same bed, but then we end up separate. You know,
That's kind of you, because like my wife goes to sleep around 11, let's say. I come in, I turn on all the lights. She's like, "Why are you turn out the fucking lights?" I turn off the main light. I turn on my light by the bed, and then I walk out of the room. She's like,
Why do you
That's-
ruin her
that's a
sleep?
dick move. That's such
It
a
is-
dick.
it is a dick move.
but she got the goggles on, you know, like the whole thing, closing
She
your
sleeps with
ears.
a Quest on, right? She sleeps
Yeah,
with a
she
Quest
sleeps.
3 on her
She's
fucking
got everything on. I'm like, what do you see? She's like, I can feel
Vitaly,
the
you're
light."
on your phone till like 2 a.m. and she's probably so annoyed. You're just there tweeting under the cover like fucking like a little kid.
Yeah.
All
Shout
right.
outs to the producer wives for making this happen. You know,
Yes, we
pretty
all love
much.
you.
Yep.
Don't
Stock
take out our
market.
money.
What do we talk about? What do we do? Carlos, you said you had a topic. You want to talk?
No, it's just in general. Like I was saying that I've been researching a short position for the first time. Like
For
it
what
never-
company?
There's a company called Avid Media Composer,
Oh, geez.
and
Okay.
they're in talks with JP Morgan now of getting. It's been kind of a rumor in the industry for several years that they just don't have the capital to stay afloat, and now they've been in talks with JP Morgan to look for a sale. And so I've been talking about this with a couple of buddies of mine because it is the premier editing software that we use when we edit big TV shows. And they had a recent pop. That little pop there is on the news that they could potentially be acquired. But it looks like now they're actually going to be acquired by a venture capitalist, which is not good because they're basically just going to come in and try to get subscription money.
Do you know the name of the VC by any chance?
Yeah, I've been doing some DD on it. I can pull up the
Interesting.
articles.
Avid. The world is so big, bro. I've never
Well,
heard.
they
of this
also own
company.
Pro Tools, by the way, which is more, you know, that's pretty much the standard for music.
But I thought
right?
Apple owns Pro Tools.
No,
No.
Apple owns a program called Logic. The thing is, Pro Tools. Here's the big problem: is
Wow.
Pro Tools is predominantly where they make their money. So Pro Tools is the software that they use to mix television shows. Most television shows
And
most
music,
feature
And
films.
all
music,
albums,
music,
all
music,
yeah.
albums.
That's the premier thing. But because it's also used in music, that's where they make a majority of their money. The problem that people have with Avid Media Composer is that even though it is there's a couple of reasons why I think this company is going to go down, and I got some links if you guys are interested. The problem is that because most of the money is made on the music side in Pro Tools, they don't have the R&D to say keep up with the advancements on Media Composer side. So what happens is this software is kind of dead, and it's been limping along the last few years as companies like Apple and Adobe have been continually advancing the software, fixing bugs, and listening to the public. Now that they're releasing a lot of these like AI-based tools, Avid literally has nobody on staff. Like they don't have the engineers to even do this. So even though it's the industry standard, and for years, post houses and studios did not want to switch because what they say is, well, what does the talent pool use? Most of the best editors use Avid Media Composer, so we're going to use that software. But I've got research here that shows like most of those editors are looking at retirement, and they're not replacing them with young kids coming up in school. They're learning Final Cut Pro and Premiere, and some of them are also learning another program called DaVinci Resolve. So because of that, they have this big problem where at just when they need to get a new generation of people to come in and justify the software's existence, there's nobody. So that's why I think they're looking for a sale now. I got some articles here if you want to look at some stuff.
That's good. I don't know if it's a short. I mean, shorting is always risky on stuff like this. But
so yeah, well, the thing is, you have to be right in the next year or two if you do a long.
Yeah.
So
yeah,
if you're wrong within 2 years, then you're gonna have to re-up that short.
Yeah, and what I've got, I would buy like long puts. But the thing is, an article came out yesterday that they think that they found a buyer. So here, let me look up some of this.
Chris, you've made a monster. You created a monster. Dr. Jekyll, Mr. Hyde, right here.
Okay, I'll just share some stuff, and this is what I was doing last night. Like literally, here, share this. So, for example, let's see if you can see this. All right, so these are the companies. This is a great website, by the way. So these are the companies that are using Avid Media Composer. And if you look at the demographics, looking at Avid Media Composer by industry, we find that media production, broadcast media, 12%, higher education, 59% of the company customers are in the United States. Hold on, where's this other piece of software? Hold on.
See, for me, companies like this don't necessarily make sense to short, only for one reason. The best shorts are the ones that are doing something that's fraudulent, that just has to be turned over. Companies like this can limp along for a really long time and just basically survive, right? And the entire time that they're surviving, you're paying. Not because the thing is with shorting is that it's not just you short a company and that's it. You actually have to pay to short a company, and you have to keep paying until your thesis comes true. So, that's one of the downsides of it. Whereas if you've detected a company that's a fraud, then that's another thing.
Oh yeah, well,
if it's a fraud in their business,
well then look,
hold
on. Well then I'm misspeaking. I'm not saying to short the company. I'm just saying to buy some long puts on this company, because here's another thing too. The company was trading at about say $15-16 for a long time, and now most analysts feel that it is fairly valued. So it had this run up, and if you didn't catch it that run up, then there's really only one place for it to go. They're worth $900 billion. The market cap's about $900 billion, rather maybe $1.2 billion. They make $250 million on their subscriptions. But I mean, there's so many.
Vitaly, you're muted. You're muted, Vitaly.
There's so many reasons why. Here's.
I said that's not bad. 250 million they make, and they're only
1.5. That's actually not horrible.
It's not a horrible valuation.
Right.
And their cash flow, they're only burning about 15 million a quarter on cash. So that's not, like I said, they have a long runway in terms of going down.
It's
so,
the AT&T of editing.
I'll tell you why. But here's the thing, and this I'm sure Amit's gonna love this. They're always doing research over what is better, traditional content versus user-generated content. And here's what you find. User-generated content, as mentioned above, traditional content is produced by the brand, whether it's in-house or outsourced by an agency. User-generated content, that's just a definition. But if you go down here, let me see, where was the...
I'm assuming they're helping a lot more people create traditional, because you said it's like mainstream TV stuff.
Yes. Hold on. Oh, man, I had all these links and stuff that I was getting at. Basically, what they're finding is that, in general, user-generated content is cheaper to produce and has a much higher retention rate and drives sales better. The issue that Avid Media Composer has as a platform to edit is that the cameras basically don't shoot the codec that it uses. So when you shoot footage, like let's say you go out with your iPhone and you want to bring that footage into Avid, there's a way that it can work with the footage natively, but most of the time it needs to convert to its own proprietary codec, which is one of the reasons why it's considered very stable. The problem is most companies don't want to pay for that. So if you shoot like a big shoot, like say you're working on a show like Vitaly's show, you come in with terabytes of data. If you want to start editing right away, you're not going to use Avid Media Composer, because in order for you to do that, you have to convert all of that footage into yet another codec, which takes time. There's software that you can use that you can just essentially start editing out of the box. And what's happening is they've compressed the timeline so much now in my field that you just don't even have the time to produce the actual show. So some companies are looking for other software that allows them to start working immediately. Or say you have, a version of say Adobe Premiere or Final Cut Pro on set. You have a guy DIT on set who's actually preparing the files that they can go to edit and start editing episodes while it's happening. So what Avid is, the problem Avid is having, or the benefit that it has, is that most of like the old school editors still use that, and most of the old school studios. But I'm going to show you some data right now that shows that these guys are leaving. They're leaving the business.
But let's move on. Let's get that to the end because we got to move on to like more general stuff going on in the stock market. But yeah, Avid, for anyone who wants to know, AVID, that's the ticker if you're interested in that.
Yeah, I'm gonna do like
Carlos, I think you're right about just one last note. I think you're right about everybody's moving to DaVinci or Adobe or Final Cut. That's true, absolutely 100% true. Especially new editors. Like, what are you going to download? DaVinci's free, or $300 for the Pro version.
That's another thing too. I mean, Avid was making bank in the 90s and 2000s because they were selling these hardware boxes that you would need to play things.
And they never updated the model. Yeah,
but the problem that happened is the computers got so powerful that those extra boxes weren't needed anymore.
Yep.
So now anybody with one of these, right, a $2,000 laptop, you can edit broadcast on this laptop.
Oh, you can edit
and
4K,
SSD in there,
even 6K. Yeah,
you can edit 4K, 6K on that. So they were making a ton of money with these contracts, selling all this hardware and service contracts on it. Now they don't have that revenue. So now what they do is they just charge you these ridiculous $600, $700 a year licensing fee, and everyone that uses it in your facility, whether they're a producer or an editor, needs their own copy. Whereas Premiere is $20 a month.
I did have
$100 a month.
I did have the counterpoint though, because I wanted to say, yes, the Avid thing is correct for editors, but in terms of music, I don't think it's strayed far from Pro Tools. Pro Tools is still the standard to go to do any sort of music production. I haven't heard anybody. I mean, Logic is a little bit out there, but even if you have Logic, you probably have Pro Tools. If you're a serious musician or a serious producer or a serious record label, you're not messing with anything else besides Pro Tools.
Yeah, yes, but part of the deal that they're considering is splitting up the business. If they put it like this, if they split the thing into two companies, if Pro Tools becomes its own thing, Media Composer is dead, because that's really that's what's making them
keeping it afloat.
That is the only thing that's keeping them afloat. There are bugs and issues that we have in Avid every day that people have been complaining 10 years. Simple things like even creating titles. It's virtually impossible. It's so difficult to even do something like subtitling. And if you look, there's some statistics here that show that most editors now speak a second language, and that language is Spanish. Most of the time, when you're working with these companies, you need to subtitle. If you can't use this software to even subtitle it, to give it to your English-speaking EPs, you're burning a lot of time. Most jobs that I work on actually have a dedicated assistant editor that will just do subtitles.
Have you heard DaVinci's new software that basically creates subtitles off the bat?
Yeah, that's what I'm saying. That they have software that does that, or Adobe has software that does that. So it's getting increasingly difficult to justify this legacy cost of this.
Yeah, software. And as Derek says, 2 private equity firms, VC funds, are trying to buy it as well. So something we got to keep an eye on.
It's interesting, but not shortable. I think it's dangerous to short.
Yeah, I agree. Especially the valuation, it's not the easiest.
Well, the puts on these things
might make sense on it.
Puts on buying puts on these things, they're super cheap. They're like 10 cents, and they go 2 years out. And so for every $600 that you spend, I think you can make a 5x on that. So it's a very small allocation.
Well, I can give you a better way to make money if you want.
A company called Enthe.
A company called SoFi, baby. You want to? I'll pitch it to you right now.
Well, but also this is my field. This is my business.
Yeah, that's why you're so passionate about it. Looking into
like, it well. I'm very.
He has a valid point. It just could take a very long time.
Yeah. All right. Let's move on.
Yeah.
Do you have
I was going to say, I just want to eventually, after we're done with our macro segment, I'm going to pick up a little bit on the Disney thing and also just get your guys' opinion on some of the stuff around the entertainment business and how that affects companies like Disney. But let's do macro and then we can move on to that.
Okay. By the way, do you know when Rango's coming in, Carlos, at all? Or
I'll send him the StreamYard now.
Because again, if we got to go in 40 minutes. So again, sometimes we can do a dedicated episode, but it's hard to fit everything in one. So if he can't do it today, that's fine, because I know it's going to get really hard to do it. Okay, Chris.
Actually, my bad. I should have sent it earlier.
Inflation, macro. What are you seeing, and what should be expected?
Sorry. I'm just going to interrupt because I do want to pump Tuesday's event with Meyer Thacker about Enphase. So everybody should definitely be there Tuesday. We're going to talk Enphase, and we're going to see why he's bullish on it. So just wanted to say that before we end the episode.
Okay, cool.
Yep. So let me just share my screen real quick. This is my thesis right now for going into next week, which is a little bit worrying. I posted this on my Patreon before I left. this chart. No, give me 1 second.
You're saying worrisome?
Yeah. Let me just show you guys real quick. I sent it about 2 weeks ago just because I was getting a little bit worried, and like over time, it's actually starting to be a little bit more confirmed. So let me just share 1 second. Okay, share. All right, here we go. So one of the things is like, the market cycle is always ever present. We're starting to see a lot of things starting to, in my opinion, starting to calm down a little bit, and the fear in the market has been pretty much stamped out, and we're seeing a lot of bullishness coming in. So right now, there's a ton of people jumping into the market, and I think this Friday was the first leg of what do you call it? Some sanity returning to the markets, with a lot of these companies, these zombie companies, earnings being reported, and they're not exactly showing growth, and they're actually showing the true side of investing, which is that these companies are actually going to be on a cash flow basis negative and eventually die off. So the sentiment here when I wrote this was that extreme greed. You can see it from a put call buying angle. It was just up there, and I actually sent a great link with some DD on someone else that actually brought this up from a euphoria standpoint, and it was actually a really good video. I'll share that with you guys, in which case you could just put it in the chat and check it out yourselves. But essentially, right now we're starting to see two bad things happen. One, there's over enthusiasm in the market, which is why we saw a lot of companies run up. But what's worse is inflation. I've been tracking the entire month of July, and it looks like it's going to come in pretty hot. And CPI is reporting next Wednesday. We're at the end of an earnings cycle where a lot of earnings were really positive. So people are like, oh, the recession is canceled. So the bulls have pretty much been taking victory laps. And if CPI comes in around 3.3, 3.4%, which is what the Cleveland Fed is projecting, we could see a big drawdown in August and maybe even some parts of September. Even Tom Lee, who's been an everlasting bull, anytime you see Tom Lee, the guy's bullish. He came out and said that we could see a 10% correction in the markets. Now, why is that important? Because I think that narrative is going to feed itself, and people are going to eventually get wind of this and then sell off a lot of their positions. This is where high classing your portfolio really makes sense, where you don't want to be in a lot of speculative names, and you don't want to be in names that are relying on headlines for people to get in and out of, right? So it's like, oh, blah, blah, blah's inclusion into the S&P. I'm not going to say who, but you know who I'm talking about, Amit, is the reason why this company is going to go to 25. But no one is evaluating, like, hey, on a market cap basis, where are they? So I think right now we're in a gray zone of things can go in either direction, but the likelihood of things going down for the next month are there. And so I am positioning my portfolio to be a lot more defensive. There is one thing that I'm doing, and maybe Vitaly, you may not agree with. I'm selling a good portion of my Meta and instead taking that money and putting it into Google. Meta has had a really good run up. Google, which reported fantastic numbers and is growing and making all the operational changes that they need to, they are still lagging behind their all-time highs. So I think right now the better play in terms of value is Google. And actually, the reason why I'm so bullish on Google now is because of all the DD that I did on Disney. And I found out some really interesting things that are going to be really big drivers for Google going into the next 2 years.
Well,
and so
response at least to your Meta thing. Yeah, I mean, we've had a great run, first of all. It's good to take some profit. But if you look at Google, Amazon, all the big guys, and Meta's still far below what its all-time high is. In fact, Google is doing better than Meta in terms of the actual return, if we're talking about the last couple of years. So even though we had a nice, basically V-shaped recovery for Meta, we're still not where they're supposed to be. So my point is, I think there's still room for both. I wouldn't want to get rid of either one. I think both are going to do great.
For me right now,
buying Google at 130, you think that's good if we're seeing a correction? Like, would you rather?
So I think what's going to happen is people are going to be selling off their shittier parts of their portfolio and going into things that are a lot more safe and secure, right? Like, think about it this way.
So hold on. So you think that we're going to transition from small and mid caps that have been rising, the upstarts, open doors, et cetera, into large caps. But how do you reconcile the fact that large caps are already up almost triple digits this year? Like, how do you?
Well, it depends on which ones you're talking about, right? Some of them definitely have been triple digit runners. The problem is the bottom part of the non-profitable companies. A lot of people in the last probably 3 months shifted into those, especially retail shifted into those. So now you have soft money on the sidelines looking to get back into the market, and they're trying to pick up the turnaround plays. The one that's the most obvious to me is Google, because they're generating so much free cash flow that they're able to buy back so many shares. So in terms of safety, that's what it is. People have gone from applying cash from safety to treasuries and bonds, and instead just going the equity route and just buying companies like Google. So I think right now we're going to see a rotation from two things. One, you're going to see the weaker mega caps end up consolidating a little bit and going into things that are more undervalued, like Google. If you look at Google's PE right now, it's like 27. Their forward PE is 22. So it's a higher classing of the pretty much like the top of the what is that thing called? The quality of companies. And then another.
But wouldn't Meta be part of that? I don't think. I think they're going to get out of the shitty stocks and go into the quality FANG stocks. That's
right.
Basically.
No, I agree. The only problem with when it comes to Meta is because they've had such a big run up. The market sentiment is that there's less room to run up for Meta than there is for something like Google. Right?
Remember what you thought about Nvidia?
I know. That's the one.
And even I sold, by the way, in the 300s, and I was wrong. And I made my 3x. I'm like, I'm a genius. No, it went to, what is it at? 500 and change now.
Yeah, but you know what? But the thing is,
whatever.
With Nvidia though, it's irrational. Whereas Google and Meta were rational picks when we made them, especially Meta. Meta was at one point. Meta was $200 billion with $50 billion in fucking cash flow, which is nuts, right? I think Google is in a similar position because right now they're generating about 80 billion in cash flow right now, which 70 billion is going into just share buybacks, right?
Yeah.
So even
and there's no existential crisis. There's no ChatGPT at all. That's taking.
I know what you're saying, but I still don't get your point because Meta's buying back 50 billion, so they're both buying a lot of stock back. It's not like one or the other, in my opinion. I think you're just picking. You think they're going to outperform Meta. That's what you're saying.
Because Meta's up 300%, Google's up 30%. That's
on that point, you're probably right because psychologically speaking, I could see people transitioning just because I'm up 300% or 200%. Yeah.
The other thing is with Google is that under the right circumstances, Google is actually pretty recession proof, right? If you think about it, if you lose your job, the one thing you're not going to do is watch less YouTube videos. You're not going to do less searches. You're still going to search. You're still going to do all this stuff. So in terms of recession, the recessionary impacts are going to be felt least by Google, right? So if you think about, let's say Tesla, maybe people won't buy as many electric cars, right? But people are not going to stop watching YouTube. I asked 100 people, hey, listen, what is your main form of entertainment these days? Every single person I spoke to said, I watch YouTube about 70% for my entertainment, about 30% all the other stuff, and clearly we see it based on our own user growth and everything. And think about it. User generated content is so fucking cheap for Google because it's all 100% revenue. They have no production input. They have no production output. All they're doing is they have no strikes. There's never any worry about a strike, a union. What's going to happen with all these shows not being produced right now? People are just going to go to YouTube, watch more YouTube content. YouTube is also monetizing their shorts. It was actually spoken about during the conference call about how much monetization is happening with shorts, just like with Reels. And then on top of it, the number of screens that YouTube owns right now is only seconded by Apple with phones, because every single TV that you're seeing right now, about 70 to 80% of the TVs come with Android TV loaded in there. And now they're acting like a toll bridge for all these content publishers, whether you're HBO Max, whether you're Disney Plus, whether you're X, Y, and Z, all of them are paying Google fees to be on there and be in a certain position. Out of all the companies that I can think of that are going to do exceptionally well over the next 5 years, Google especially. And the reason why I found Google so intriguing is because as I was doing research on Disney, I realized the amount of people that are doing linear TV to DTC is just crazy, man. Crazy. It's
Yeah, everyone's cutting the cord. Yeah.
yeah.
Well,
And so where are they going?
even the companies
Yeah.
themselves are finding that it's a lot easier because some of it too is the data, the access to the data and the viewing habits of the people. You don't get that necessarily with things like Nielsen ratings.
Now here's the part that's awesome about Google too. Because they own so much of the screens, they also own all the background data on the people. So you think about it this way: targeted advertising on TV shows. It's starting to happen now, where Netflix moved to an ad supported tier. Disney Plus now has an ad supported tier. Now, who are they partnering to show all those ads? Your boy Google. Google's got all that background data. You work with them. They do all the advertising where they do the targeted ad portion. They show it to you. Google gets a cut. Disney gets a cut. All these guys get a cut. So as more people start cutting their cords, they're all going to be moving to the screens. And you guys, and this is just a poll between you three, where do you guys watch most of your content? Right now. Like I'll start with you, Amit. Where do you watch? Where do you watch most of your content?
Why are you laughing, Vitaly?
So
He's about to
You
say
didn't
the
hear my
bathroom.
question. You didn't hear
This
my
guy
answer
literally
yet.
lives in a room on
He's about to
YouTube.com.
There's a website called Only. No, YouTube. YouTube is what I watch.
YouTube,
But wait,
right?
is your question
Yeah.
is your question what platform, or is it like physically where are you? Like I'm watching this. Say
No,
sitting
what
down on my
platform?
phone
What
or-
platform? What platform?
Amit.
It's YouTube.
Of course, it's
Yeah.
YouTube for him. It's YouTube
about you,
for all of
Carlos?
us, obviously, because we're losers.
Yeah. Well, no, that's
I've
not
been-
it. But see, it's everyone though. Anyone that I've spoken to, even like the oldest of the old, like my dad. My dad watches shit on YouTube all day long. My mom, she watches soap operas and everything else on YouTube, right? She has content. She follows content creators on YouTube.
Bro,
I
my
had no
mom
idea.
followed a vlogger this weekend, and
Yes.
she uses my premium account. So her 2-year-old vlogs are popping up in my feed from India, and my mom's obsessed with her.
And your mom is obviously a captive audience, but then monetization, Google is getting to literally, it's just cash coming into Google's pocket without them having to do anything. So when we spoke about Meta and we said, look, they have 3 billion active users on Meta platforms, bro, Google has 8 billion people on actively. Even if they don't have a Google account, every single person is watching shit on Google, whether it be probably YouTube. So
Well, Chris, thank God I bought Google at 85.
yeah.
All right, let's bring Rango in. We got him backstage. What's up, sir? How are you?
Whoa.
Hey,
Hey, this is
How we know
Rango's
how he
Google
watches
fans.
Signings Junkies. He's chilling, watching those back.
There's no
Did
pants
not
on right now.
expect that.
I mean, I'm wearing shorts. It's hot, man. Summer's pretty hot here. Yeah,
Yeah.
San
What,
Francisco,
over
Arizona,
100
right?
in Cali?
You're in San Francisco, right?
it's
No,
San Jose.
San
San Jose. Yeah.
Oh, San Jose. Yeah, no, it's been really hot. Like it's been like headache hot the last couple of days.
Yeah, it's
All right,
I'm in the South Bay, so yeah.
We got about 20 minutes. Are we talking Amazon with Rango?
What do you guys want, man? Amazon?
I think let's
Yeah.
continue from Amazon. What were your thoughts on their earnings, and why do you think the street gave
Is
it
it safe
10%?
to discuss the short thesis too? Because I kind of like Jesse Dow's short
Yeah,
Yeah,
let's discuss that. So this
Oh,
guy Jesse on
yeah, we
Twitter
can-
has like $100,000 or something like that, maybe $50,000 short on Amazon, and he's adding to his short position.
Yeah.
So
we can,
maybe we can discuss that.
I think you were interacting
I
with
mean-
him, right? Weren't you, Rango?
I was.
Vitaly
No,
was.
he was. Vetali was.
But
Yeah.
I thought
Okay, so let's do
No,
this. Let's do this. Rango, give me like a couple minutes on your feedback from earnings, and then I'll transition to Vitaly to explain the short thesis. And then I'll get your thoughts on the short thesis. So go ahead.
Shit, I got to bring it up then.
Yeah, go ahead.
Earnings. I mean, AWS optimization is done, so they are going back to growth. I mean, they cut a lot of cost. Great. There's no recession, so people are buying shit on Amazon like always, and their capex reduced, and operating margins are increasing. Like they beat big on operating margins, and this has been the thesis, right? Like I've been saying this since 100, I guess 90. I've been buying every 2 weeks Amazon, and I continue to buy for a long time. Yeah.
Nothing in that earnings worried you about anything.
I don't care about like next 1 year recession. I mean, I'm thinking super long term, dude. Like
Bingo.
15 years.
That is
Yeah,
the
I was
actual
really-
answer. Bingo. We don't
Yeah,
care about
I
1
don't
year
care
of
about
Amazon.
like all this anything. Like my super long term thesis is this, like simple, right? Amazon is delivering stuff to people. Like most of the GDP is people buying stuff. right? As internet is going to become bigger and bigger, and your stuff is like you are being more immersive on buying stuff, you're going to keep buying more stuff. And as they deliver more stuff to more people, the cost of delivery is going to go down, right? So that's just the start of it. And then put in the long term tailwinds like EV adoption, which reduces your cost even more. And just like energy, it's going to reduce your cost even more. And deflationary it's going long term, you're hitting a deflationary stuff. So your cost is all going down, and autonomous vehicles just brings your cost even down. Like they're already delivering it for free. And what else? Like, they cannot give you money to deliver stuff, right? Okay, they'll make their cost of goods, like the stuff they're selling, the prices of them will go down, but that's okay. They'll make more margin on that, and a little bit less margin on that. But long term, I see it as the first. I can see it as a 16 trillion dollar company, like in 15 years or something, because people are going to buy more stuff. They're not, and on top of that, all this data they're going to advertise, and people will want to sell more stuff on Amazon. Prime membership should go up.
They also have
AWS. I'm not even started talking about AWS right now. And,
they also have that subscription service. So on Amazon, if you get sick of buying stuff, you can just have it come to you like every month. So they have like 200 million of those subscribers worldwide.
It's just
$106 billion, $106 billion just from that. That's people that basically set it and forget it, right? You need dishwashing soap.
Yeah,
and it comes every month. I
I
had that.
think I do that for my deodorant. I actually do that.
You just right. People have
Exactly.
the health beauty products or like a cat food. That was a big thing for me. Every month, just bringing me 2 boxes of the cat food and a thing of cat litter. Just keep it running. And they have those buttons too.
Yeah, it's a joke. Like I go to like all these open houses. I'm trying to like get a house, sell off a house, not right now, but like next year, maybe a couple of years later, but still trying to understand neighborhoods and stuff. Literally everywhere I go, there is Amazon packages outside, like in almost all households. Like it's at this point, I think it's like, I don't think Amazon is going away, and I don't think like there's literally no vectors you can attack. You know, there's just no, even Shopify who was there.
I was saying, let's
little bit. There's a competition of Amazon, right? They got rid of their delivery service and there is no logistics. Shopify logistics is coming up, and then they just going away now. They just wrapped it up. So it's just no competition there. Yeah. So
let's go, Chris, then Vitaly on the short thesis. Go ahead, Chris.
Well, the short thesis behind Amazon is that they're becoming more reliant on their third-party selling network, which is primarily based in China. So about 70% of the retail third-party sellers are Chinese people selling on there. So what the bear case, which by the way, I don't necessarily agree with. I think a lot of people have this China thing a little overblown, that we're going to go to war with China. Like, bro, we're more mutually tied to each other than people believe. The Chinese need us and we need the Chinese. They make our cheap shit, we buy their cheap shit. That's pretty much the business model that's been working for the last 20 years, and it's going to be another business model that works for another 20 years. I'm sure that third-party sellers will diversify eventually. Where Indian manufacturers are starting to make a lot of stuff, they're going to come in. So I think the worry about China somehow invading Taiwan is like the bear thesis with so many companies like TSMC or ASML. I think it's a little bit overblown, to be frank.
NVIDIA.
I think there's a case to be made that maybe some not so great relations with China will impact certain businesses slightly, but mutually we all need each other. So I don't think that that's a valid thing. But so with regard to Jesse Dow, but I'll finish and then I'll give it to you. Jesse made it very clear that this is for him a hedge position. It's not necessarily a investment like to make on the business operations. From a business operations standpoint, what's his name? Andy Jassy has done a fucking phenomenal job cutting costs everywhere he had to, even cutting costs in the media division where they spent $1 billion on Lord of the Rings. Come on, guy. That was the dumbest thing ever to spend so much money. So the cost cutting at Amazon is so amazing right now. And all of that cash flow now, I don't know what Amazon's going to do with it, because I don't think they've ever done share buybacks, but I think this is the first time where they actually have enough operating cash flow to start buying back shares,
So I think, once again, Jesse Dow should probably just come on and speak for himself. But besides the China thing, he also says that, I'm going to read it exactly. I know nobody cares, but year-over-year shares are plus 3% at Amazon, and share-based compensation almost 40% of trailing year cash flow from operations. If you take out the free cash flow, the company is still burning FCF heavily. So basically, he's not only saying the China thing, he's saying they actually don't make a lot of money because they're printing all these shares as stock-based compensation, obviously. So these are things I do have to look into. I didn't look into everything you said yet. But once again, if you're of the mindset, just to give my bull case for Amazon, if you're the mindset that even though this company's 20 years old, it's still growing so massively, and you could see them innovating at lightning speed at all different fronts, right? So my point is, you have to get the best engineers, and we know how to get the best engineers. You got to pay them a shit ton of money, give them some stock options, and Rango is one of those engineers where they're giving a bunch of stock options at Tesla. So these are the things that growth companies, unfortunately or fortunately, have to do in order to keep continuing that wheel of innovation and growing. So I don't see this as a problem long term. This might be a short term problem in the next year if there is a recession that we're waiting for. But Amazon it's a juggernaut. It's going to keep winning.
The other part that I don't want to misrepresent Steve's position, but Steve talked about this a little bit the last time when we were talking about Amazon, and he was comparing them to Walmart. I mean, if you look in 2018, Walmart's revenue was 500 billion. And Amazon was 178 billion. By 2023, Amazon's revenue is now 514 billion, but Walmart's still making 611 billion. There is somewhat of an advantage of them having a brick and mortar store. Every product that Amazon has in the warehouse needs to go on a truck, and there's a cost that they need to spend in order to get that to a customer. And so there is some efficiency that Walmart gets by, say, having this massive warehouse where people can come in, like on a Costco, and actually pick up the thing themselves.
If it's so efficient, why is Walmart sending me, hey, join for $49, we'll send you anything to your house at any point? They're doing that right now for free.
Well, no, it's not to say that they're not, but there's still some people that use that service, and it's a portion of it that they're not capturing. And again, Amazon needs to pay. Every product that's in that warehouse needs to get put on a truck or something somewhere and delivered to someone. So if you have them, if they somehow opened up a retail store where you could walk into that store and buy that, they would eliminate that cost. There's a little bit of a cost that.
Yeah, but then there's a whole other cost.
Yeah,
right?
but that's Carlos.
Somebody else is selling there, right? It's not like Amazon owning the products. It's somebody else is selling it on Amazon. It's
somebody else. Sometimes somebody else is sending to you, and not even Amazon. But Amazon does have a warehouse where they charge these people to store their shit. Okay, they charge them a fee. Then when you send it and you don't like it, and you send it back, they charge them again. I told you last time my wife stopped selling on Amazon because it was ludicrous with all the fees, but people are paying these fees.
Yeah. It just, again, this is just certain little things to consider, right?
And on the free cash flow front, I just wanted to address that, right? Like 2020 was the highest hiring. 2020 was one of the highest hiring spree ever. Because everybody started ordering stuff, and they just needed to hire a crazy amount of people. And Amazon hired a lot of people in 2020, and most of the stock-based compensation hits on the back end, like the third and fourth year, 40-45%. So that's what you're seeing hit right now, right? So the effects of not hiring this year and last year will hit like next year and next to next year. So that's like the free cash flow per share. I mean, like I said, like all these tailwinds and headwinds like keep hitting, right? And at the end of the day, you just have to zoom out and look at the long term. Only then, especially
just to be clear, you're saying 2020. We know what happened, COVID, but I'm looking at the chart. Maybe I should just share it. Let me just show. Let me present for a second. And there we go. If you want to take a look at this, so you can see they've been. I mean, if I even go back further, it seems like up and to the right in terms of shares outstanding. So it's not like less; it's always more. So I don't know if 2020 was the anomaly year for them doing this kind of share dilution. It's probably going to continue because they're growing multiple businesses at the same time.
That's true. Yeah. It's just like it just grows with operating expenses. Like that's pretty much it. Yeah.
I think that is going to change, though. I think over the next couple of quarters, we're probably going to see some share buybacks. The reason why they're going to be doing it, because before they were using all of their additional cash flow to invest back into the business via expanding their delivery service network and their warehouses. Now that they've built out all that infrastructure, they have a lot of room where they can just use those same assets for a long period of time, depreciate them, and they instead use that cash flow to do other things. In my opinion, the cash flow now is going to go to share buybacks because the employees really, really need it because they all were promised at a much higher compensation level than they're currently getting. So that's number one. If you want to retain talent, you got to make sure the shares are actually worth something after a while, right? And the other thing is, what are you going to do with the cash that's just sitting on your balance sheet? So I think right now, from an investment standpoint, you're going to see Jassy move to buy back shares. And what you're going to see is the same exact argument that people used a long time with Facebook, with Google. Oh, all they do is they do a lot of share compensation. Yeah, but look at the other side of it when they're buying back shares. They're buying back way more shares than they're actually giving to employees. And that's the key. So right now, someone came to me and said, well, your Google thesis doesn't make sense because they're spending so much money on employee compensation via shares. I'm like, that's fine. But look at the outstanding shares because they're buying back way more than they're doing in compensation. So right now, the life cycle of Amazon has been around reinvesting their cash flow into their business. I think this is the first time in a long time where now they're switching it up and their operating cash flows are now going to be shifted to share buybacks. It's going to take some time before they actually start doing that. I don't know what Jassy's long-term planning is, but I think this is like a couple of years of, hey, we've already built out the infrastructure for the next 5 years. It's time to take some cash and put it into the stock.
It was unfortunate they didn't do this when the stock was $100 because it would have made total sense that, hey, we should allocate some money to buying back shares.
But they didn't have cash flow.
But also
well, there you go. That's the answer to that. They had negative
that swell in hiring that they did in 2020. Not all of those employees were promised this stock compensation. Like that's usually the management and level up. So even the drivers,
right from engineers too. Right from engineers, and they hired a lot of engineers too. So
and any white collar employee, if that's what you're saying, right?
Okay. Yeah. But do you know what the spread is of in the hiring in terms of how many of those were engineers and like how many of those were just physical drivers or like warehouse workers?
Overall, I think overall, like their whole every time business segment grows, like even your engineering grows proportionately. So overall, I think they doubled or something like in 2-3 years in terms of size. So it's just an exceptional amount of people. Yeah, it's a lot of people. And my portfolio and Warren Buffett's portfolio has only one stock in common, that is Amazon. All this like free cash flow, he knows a lot more about it than I guess we do, because he's just a value investor and he owns Amazon in his portfolio for a long time, and I trust him with that kind of investment.
You said personal portfolio? I don't even know. Was it personal or in Berkshire Hathaway?
My portfolio and Warren Buffett's has only one stock in common, that is Amazon, not even Apple. I don't even know.
I'm saying Warren's personal or Berkshire Hathaway.
Warren, like Berkshire Hathaway, sorry.
Okay.
Berkshire Berkshire has Amazon. Yeah.
Well, that's not him buying it. That's his other two lieutenants who are.
Yeah, but still, like he hits the red button on selling it. So yeah.
There's one thing I want to address really quickly. Can you put Baba Tamuri's thing on there? So right here, good question. Why not use cash to just buy short-term treasuries? Why buy the stock? And let me give you an example and just show you what why. When you do share buybacks, when you do treasuries, you're going to get a 5% fixed return right now, which is great. Most of the time, you never got the opportunity to do that. But right now, you get a 5% return. This is Google's financials, okay? So every time you buy Google shares back, this is the profit margin, and this is how much you're actually getting for each one of those shares. You're getting a 24% return on your dollar for dollar spend. That's why you're not getting 5%, you're getting 24%. That's why you buy back shares and you don't buy short-term treasuries. You can buy short-term treasuries as a way to like bolster your balance sheet, but in terms of buying back shares, that's way more profitable for businesses that are still high growth, high margin. And that's why Apple has done nothing but buy back shares for the last 6 years, 7 years.
And also it becomes easier, like you kind of financially engineer to beat earnings estimates, because Apple basically, that's why they beat like literally every time, because they can like, oh, are we gonna miss, let's buy back some shares and then like we can beat it. Like it's just like that's why the growth companies, when they miss like a lot, I'm like I have some sympathy towards it, because like they don't have control over so many things. They can't just buy back shares and engineer those like numbers, and they get hammered 10-20% sometimes for no reason.
Yep. Buybacks are a way to return capital to shareholders, where now what's happening is companies like Google, companies like Amazon, well, not Amazon right now because they're not doing buybacks, but Apple, what happens is their pie is shrinking, right? In terms of like you as an investor, when they buy back shares, the pie of profit is shrinking, but their total revenue and their total operating is actually expanding. So your shares are becoming worth way more. So if you think about
Yep.
free cash flow, what do they do with it? Let's say they just sat on it and they said, you know what, let's buy treasuries. That money would go, that's money wasted. That's because you're only getting a 5% return, where if you bought back your own shares and the shares now doubled, that's 100% return on your capital that you spent 5 years ago. So
Or it
think
went up
about
10%. You know, it could
Yeah.
go up 10%. It's already beats
Yeah.
it. So,
Yep. So think about Apple when Apple was trading at $60, I think 2 years ago, right? Apple bought all those shares back at $60, and now Apple's trading at almost 200, which means that investment that they made in their own stock just doubled, or tripled, actually, technically speaking. So share buybacks are actually a great thing. If they do it right when things are undervalued, it's even better.
cool. Are we gonna have a question for
It's
anybody?
Kamal.
No, we got 5 minutes left. Probably don't have time for a question. So I guess last topic, I'll put it out for you guys. Palantir earnings tomorrow.
Okay.
Any expectations? Any thoughts?
I think I think they'll
What are
miss
they-
on
what's the
earnings,
share
beat on
price right
customer count.
Go ahead, Rango. Go ahead.
I think they beat on customer count, miss on revenue estimates, and and be gap profitable.
You think
I
they're
don't
actually going
know.
to miss on revenue or just come in line?
Yeah,
You think,
I think
they're going to come
they'll miss
below
on-
what
I
they
mean,
guided?
when I say no, not what they guided, what the
Okay.
Wall Street expectation is. I mean,
Well, Wall Street
I
is
mean,
expecting 532.
what did they guide for though?
They got it for
I mean-
532. That's what I'm saying. I mean,
Oh,
some
then-
articles are saying 550, but on Seeking Alpha, 532. Most.
And then if they barely beat it, still stock will get hammered because it's like rallied so much, right? If they beat it by a long margin, then the stock will stay flat. I mean, it's just. I mean, it's all short term. Don't trade with this. Like, don't.
So here's a
like,
question.
It's
Even
just my
if they-
speculation.
Even if they match earnings, what's expected? Is it more likely it goes up or down?
down and
I'll get hammered.
Listen,
man.
they're up.
I'm selling off all my Palantir stock tomorrow morning and buying Enphase. Just getting rid of it.
This guy. In fact, tomorrow we'll talk about Sedge and Enphase, my two new
Yeah.
favorite companies.
Yeah, Enphase. I love Enphase.
Well, it's always
man.
been my
They-
favorite company. So I don't
They're
know.
so well contained. They're trading at less than 20 times earnings for next year. That's so
yeah,
crazy.
Rango, I'm
I
assuming this
can't
dip
believe
to you is just like, you got to get this dip is what.
This
Yeah,
guy,
it's
Professor
just-
Rango, has been just contacting me nonstop. He's like, I can't believe it's trading at 20 times. Like, I'm like,
It's
dude,
so
I'm
funny
buying
because
it.
there's a whole section of Twitter saying that Enphase is below 100, and it's so funny that you guys are like, this stock shouldn't even be here, and then
so
Twitter's
first of all,
telling me-
okay, so how does this hurt me if it's below 100?
Yeah.
No.
Look,
I'm not
I
saying
think
I'm not saying
I
it hurts
just
you.
keep
I'm just saying
buying.
it's funny to see the Enphase community is so split. Like, you guys are like 140 is stupid, and then everyone else
Yeah.
is like 140 is overvalued. It's just
But
so
do you know?
funny.
But
yeah,
do you know how much of those people that are on on Twitter?
I don't know anything
talking
about
about
those people. All I know is there's a heavy amount of them with loud mouths on Twitter.
But what I'm saying is a large majority of those
Most of
don't
them
even know
technical
what
traders, I think.
Enphase does.
Yeah.
A lot of
it's the
them
most
still think
technical
that
traders.
Enphase. A lot of them still think Enphase makes solar panels, for example, and they think, well, anyone can come in and make them, or the Chinese is gonna. People still don't even really understand what the business is.
Yeah, everything the
lot-
Chinese is going to come and just take over.
Yeah.
It's so easy to just come in and just take
It's
over.
a lot of
everything.
network effect in there,
They
man.
just
It's just
don't
like
understand.
Yeah.
No, there was a
It's
whole
just-
thread.
it's-
There was a whole thread that I was having with somebody where I had to explain to them that the customers are the installers, not the end customer. And you can an installer can't just switch their entire company over to a new,
Yeah.
a whole new company when you have all this inventory and you've paid all these people to get trained and certified on this gear, and you have a 25-year warranty on the gear. Like, it's very difficult. That's the moat.
Well,
Let
not
me-
only
let
that,
me-
Carlos,
margins
hold
went
on.
up.
Hold on. I'm going to ask you
Rango-
guys. I'm going to ask you guys. This is an easy poll. Okay, you run a business. You're a solar installer. Okay, Enphase comes to you. They have training. They have the support materials. They're going to invite you to their offices. They have all over the world this stuff happening. They're going to cover your. They're going to pay you to go and fix any problems. For 25 years, they're going to cover their equipment. And then some Chinese manufacturer comes in and says, "Oh, we're going to do what they do, but we'll just go with us. Don't worry about it. We got you covered." Like,
Yeah, that's stupid.
I mean, like, do you have to wake up one day and be like, sure, I'm going to risk my whole business on what you just told me in 3 seconds instead of me working with this company that's been around for 15 years that I've been working with? Are you fucking
And
crazy?
margins went up, guys. Margins went
Rango,
up.
let me ask you a
45,
question.
yeah.
Rango, do you, and then Chris, I want to get your thoughts on Palantir. Do you think Enphase sees below 100 or no?
Maybe. I mean, if it breaks 140, then 128. Breaks 128, then 100. I mean, maybe. I mean, it's technicals, man. At this point, it's just stock market is a voting machine right now. It's not trading on long-term cash flows right now. It's literally like, oh, break this level, so Like break this
It is
level,
trading on
sell more.
technicals, but I would say the technical
Like,
level is
it's
around 117, 115. That's the
113.
technical level, somewhere
Yeah.
around there.
Right. So it's just trading on technical. So you don't know where it's going to end up. But like at the same time, it's just hard to say that. So it's just DCA into it. But the profitability went up. If Chinese competition is coming, the profitability should go down. Like people, they'll be cutting costs. The cash flows should go down. They did 1 more billion of buybacks, and they did a huge beat on EPS. I mean, like how is competition coming?
The other thing is even wait till after August. I mean, Badri said this on the call, and people sometimes it's a really simple answer. People go away on summer vacation. He even said this on the call. He's like, we always have a lull in the summer because it's people go away. They don't want to install. So wait till September and see what happens with new installs then, when people actually have the time to sit down and do this and have their house upheaved for a couple of days while you install some solar panels.
Well, I just want to point out, first of all, it's still up
much lower, right?
Yeah, he got lower for Q3, so that's not the thing. But what's funny is there's two companies. I keep going back to it. If Microsoft and Apple right now halved, no one would be even discussing that maybe we should buy some Microsoft and Apple. If they literally halved, right, in the next couple of months, we'd be like, yeah, we should probably buy some Apple, some Microsoft. They're the only game in town. So now we have literally SolarEdge and Enphase being halved. Okay. I wasn't even a big SolarEdge bull, but now it's under $200. You should look at those stats, by the way, going under 10 billion, heading down to 5. Are you crazy? For the company that is in a duopoly with another company, this is stupid. So I'm going to be buying those shares hand over fist as well. And I'm not even a big SolarEdge bull, but these companies are being smashed right now because of interest rates. That's fine. But this is just a massive opportunity because the market, like you said, it's a voting machine right now. That's fine. It's voting on technicals. And the technicals say 117 for Enphase. The technicals say SolarEdge might hit 150 if it's really stupid. But you've got to be an idiot not to be DCing into this. Honestly, at this point, like, you just don't understand the story. You don't get what's going on. You don't believe solar exists. 5 years from now, nothing is better. This is what you believe, and you're not going to be in it ever. That's what's going to happen.
Okay, Chris, go ahead. Your thoughts on Palantir and Enphase if you want.
All right, just share my screen real quick, okay? This right here was Fortinet. They did their earnings earlier this week. Look at this. Look at how much they got smashed. Okay.
What's Fortinet? I don't know.
Fortinet provides cybersecurity firm, right? They're growing like crazy, 25% year over year. They got $1 billion in revenue, almost $1 billion in net income per year. Great company. Do you know what the valuation of Fortinet is right now?
I don't.
It's $44 billion. Okay. Do you know what Palantir with their valuation is right now?
Good. Yeah, that's exactly what
38 billion. Okay. At 20, it was like 40 something billion dollars. Okay. What do their financials look like? Let's take a look at hold on.
Dude, Fortinet is like
Right
one of the like blue chip cybersecurity names. Like it's
Yep.
so super mature, and because they missed, the whole cybersecurity sector got smashed. Look at CrowdStrike, look at Net, look at like Zscalers, look at like
Zscaler. Yep.
literally everybody got smashed because Fortinet is like the bellwether of cybersecurity. Yeah.
Yep. Now look at Palantir, growing less than Fortinet. Net income 16 million, basically because they got interest payments on their cash on hand, right? Growth story has been smashed over and over and over again. It's from what, 25%, and this is within 1 year, to 17, and probably they guided to 13 themselves. Dude, this is an overvalued company. No matter how you cut it, and tomorrow when earnings comes out, maybe the bulls will raise the, like, what do you call it? Just go crazy with the buying, because this is like at this point, Palantir is more meme stock than it is potential stock. So I think that it's going to go down. I think people are going to wake up to it. I think a lot of people got caught up in this Dan Ives hype train. I'm like, I can't say for sure if Dan Ives is being paid by a hedge fund to pump this fucker so that it leads all these people into it. But his $25 price target makes absolutely no fucking sense, especially for a 12, because their growth is gone down to the fucking like 15%. Unless their growth story returns, and it returns so heavy, dude, this company is going down to $10.
Why are you running a MITS interview? It's coming up, right?
Wait, Dan Ives?
Yeah.
Well, that's
Look, if Palantir goes to $10, Dan Ives has to,
Well, you still should talk to him. You should still have him on the podcast.
No, I'm still going to talk to him. But the point is, Chris isn't ruining anything. If the stock tanks, the stock tanks. I kind of agree with Chris. I think the stock might go up tomorrow if they beat on a couple metrics, but they got it for 532, and people are thinking they're going to come with 570. And it's like, they guided for 532 for a reason, and it's Q2. SaaS companies, it's not easy to beat in Q2. Q3, Q4 more likely we get to beat. So
you think they were saying? You think they were sandbagging?
I think they're sandbagging a little bit. Maybe they do 540, but some people are saying like 560. I'm like, no.
The reason I'm not, one of the major reasons I'm not like too heavy into Palantir. I actually own a lot of SoFi right now. I've been buying since 5-6. Even right now I've been buying, but like it's just they say something and do something else. SoFi, like they say it, they beat it and raise it, beat it, raise it. They have such a hold on their business. Like the management is so good. Palantir, I feel like they miss and they take off the 25% growth target or whatever, 4 billion from their 30%, and then they don't address it. I mean, like they address it a little bit.
Yeah, I mean, look, you're buying Palantir for the potential. You're not buying Palantir for a bank. You're buying it.
You're not buying it for reality, buddy. You're buying it for.
Hold on, real quick. I agree with everything Chris is saying, and I'm not trying to defend them like crazy right here. But again, this was Tesla in 2019. This is Tesla was not.
No, don't do that.
Hold on, can I make the case? Can I make the case? First, let me make the case before you interrupt. Palantir is not Tesla. Don't misquote me on that. I've been very clear about that. However, when you were buying Tesla in 2018, you were betting on potential. You were betting on Elon. You were betting on everything. It were unprofitable. They were, people could say, overvalued at 40, 50, 60 billion dollars, but you believed that the shit would work, and it worked.
Okay, but hold on. But here's the flip side of that. When people were buying Nikola stock in 2020, they were also betting on the guy. But anyone that's looking at it and sees the fundamental difference between, say, the way he was positioning his company and what Elon.
Okay, that's fine. But Palantir is not Nikola. If you want to make that claim,
well, let me address that.
No, all I'm saying is
the Tesla thing a little bit, like little bit, right? So Tesla's whole story at that time, why I bought the stock, was like hinged on like Model 3 production. Like literally, like if they get that successful, this was going to squeeze at that time. That's it. That's the whole thesis. Like that's pretty much it. And Elon had proved it that he can reduce the cost of manufacturing. He's done that with SpaceX before. He's done that already from Roadster to Model S. He has to do it from Model S to Model 3. He's had like a solid track record of doing the exact same thing he was trying to do before. That's the only reason, like I went super heavy on Tesla at that point of time with what I had. But yeah, that's the difference, right? Like
no, that
people are betting on the company to go bankrupt, but
there's no difference there. There's no difference. Palantir has a product that we think can take over the world with AIP, with Foundry, with Apollo. They are gap profitable. Management.
Have you used it?
Hold on. Let me finish. They have $3 billion in cash. My point is,
he runs OG on AIP.
My point is to say, oh, in Tesla in 2018, Elon had a track record, therefore I bet it on Elon. To say Palantir doesn't have a track record is a little crazy to me. I mean, I'm not saying AIP is going to become the next CRM. I'm saying
you just said that. You just said it's going to be the next $1 trillion winner.
No, I didn't. Yeah. I didn't say it's the next $1 trillion. Again, you guys, because of your over hype on and hatred for Palantir,
I'm hearing.
My point is very simple. Either you believe there's an AI future and Palantir is a winner there via AIP and whatever new products, or you don't. And that's it. Does that mean the valuation is justified? No. Chris, I'm in agreement with you. Before you get hyper, I'm in agreement with you. However, if you're investing at these levels, which I am not, I'm investing at lower levels, you believe there's a future that they will take over. Just like when EVs weren't a thing in 2018, you believe there was a future that it would be a real thing.
Okay, but do you see how? But this goes back to like, who was it? Michelangelo at what time did he post this? He said something about
I work in this industry. No one is talking about Palantir as like the next big thing.
He
says
Chris,
agree.
That might be happening now, but that's called being early. I mean, like at the end of the day,
wait. Look, 506. Michelangelo says Karp is literally brilliant, right? And this is what a lot of people talk about when they try to compare, say, Karp to someone like an Elon Musk, saying he's brilliant. And I'm asking, like, what exactly makes him brilliant? What I think Palantir is suffering right now is not having someone who truly like understands that business on a technical level running the company.
Yeah, again, I think you guys don't. I mean, do you know enough about ontologies? No, Karp kind of pioneered. We should be developing this stuff, which is why.
Does he know about this? What I'm saying is, does he know about this?
And I've offered you many times to send you technical interviews of him speaking about data, not philosophy, and you refuse to watch them. So, yes.
I mean, I do think Palantir has great tech. They do have great engineers because the interview bar is really high. the software engineering interview is really high. You need to be really brilliant to get into Palantir.
Yeah, I had lunch
agree
with an
all
interview
this.
a couple weeks ago, and he was telling me how much fucking work he does and how hard
It
it was
is
to
really
get that
hard
job.
to get in. They're like, I
Once you're
agree
in, you
with you
can't
on
get
this.
out.
Like the problem with it is they just don't have a handle on their business, dude. Like they
I
I
disagree.
don't know. Like I just like I feel like I don't know. Like look at like I don't like to compare.
Wait, but what?
systems,
Hold on.
right?
What's
But
the
look at
reason for? How can you say they don't have a handle on their business? What is the logic that warrants
the
that claim?
logic behind? That's what I was coming to.
Because
tell
if it's
you,
lack
like,
of growth, I don't think that's a good enough reason. Because you're betting that they'll
No,
grow in the
not
future.
lack of growth. Like that's not like what I'm saying. Like when either they don't have a handle or they're shady. One of that. Because like if they are not going to grow, they shouldn't guide. And if they are guiding, they should address. This is why, like, look at Badri coming out and saying, "Hey, we had weakness. Hey, we had weakness because of the interest rates. This is the risk. This is why we are going down. Next quarter, like we'll see what happens. Like the whole environment is bad. We are not selling through." He's nailing it on the head why they're not doing what they said they would do. Like it's a shit time for the business, yes. And it has been a shit time for the business for the SaaS products the last few
Rango,
years. Yes,
Karp
I
has said
agree.
why they're not growing. You just haven't listened well enough.
No,
Yeah,
I
why?
have
What did he
listened to
say?
literally
So
every
wait, what's the reason?
interview.
What's the
Why?
reason that he
Why?
said?
Tell me why. Why
Because
they're not growing? Tell
they
me.
had 22
It's
sales
8:10, guys.
professionals.
It's 8:10. This is supposed to be a 2-minute.
Vitaly,
discussion.
you can if you got to leave. You can
No,
leave.
stick with
I
it.
want Amit to address it. I really want to
They-
learn. Like
they
why? Yeah, why?
He
Yeah.
himself in Q4 2021 earnings call, which was January 2022, said they suck at sales. He said 7 years ago, if they had taken a more snowflake, he literally said a snowflake-esque approach to sales, they would have captured a big opportunity, which is hundreds of billions of dollars they missed out on. He said they're a product-focused company. They suck at sales. They're trying to fix that. And as an
So what
investor,
was the-
I'm betting the product will be good enough that they can fix that. But to say they
What was
haven't
the
addressed
reasoning
it
of
is-
putting that guidance and taking it off?
Well, so this is another thing he said. The U.S. commercial business CAGR'd at 30% over the past decade. Some years it was 0, some years it was 60. But at the end, it CAGR'd.
That's government,
30%.
USG.
No. So that's my
That's
point.
USG.
So when someone asked him
Yeah.
about the same thing you're talking about, he said, "Look, some years are going to be good, some years are going to be bad, but at the end, it will CAGR at 30." And so my point is,
Yes,
that's
I
what we
did
should
hear
assume we should
that. And that would have been right now because they had a war. You had a lot of war spending. You had a lot of defense spending, and still the CAGR of 30% has not come back yet in the last 4 years.
Yeah, but then that gets into how do you recognize that the total
Well,
contract value? is
I
up
think.
60%.
Hold on,
So it's
I
a
do have
question
one
of
thing
how
to
you
say.
recognize that revenue as well.
Carlos did say a long time ago, and he was right when I was like, he's like, if Palantir is going to make it and make all their money, shouldn't it be during this time when they're actually being used
No,
out
because
in the
you guys
field?
know how the government works and how to recognize revenue.
My point is, if this is
But
the time, then this should be the time they're
if
making
you
the
get a
most
$1 billion
amount of money.
contract, Vitaly, can you
Let's-
recognize all of that in
but-
1 quarter? Let me know.
Okay, at
No, of
some
course you
point they
can't.
should recognize
It's
it.
not
right,
about-
Amit?
it's not about
At some
recognizing
point
that.
they should recognize it, right? At some point they should.
Wait,
get
so
recognized
if you
as
read the
revenue, right?
10K, they are able to recognize 457 million out of 956 million dollars this year.
Did they return to 30% growth? Is my question in the US.
Well, that we have to see. I'm not arguing about that, but my point is, their TCV is up 60%, total contract value at 3.6 billion. They haven't recognized all of that. So for you guys to say, "Oh, the war happened," they should have billions. It's like that takes
The
time.
problem,
to
the
recognize.
problem.
You can't
Look,
just say
these
it
are.
is.
But that's how Carp makes it seem. You understand? Carp goes in there
No,
and
that's
says,
how
"We
you
have."
think Carp
No,
makes
but
it seem.
Carp goes up
Like
there and
your
says, "Carp
weird
goes up there and says,
perceptions of it is
we
what
are
happened.
winning this war. We are integral to Ukraine winning the war." And people are wondering where's the profit. I think. Look, if you're saying this is the thing to Rango's
That's
point
like
about
me saying,
battery.
"Where's FSG's
Wait. I want to
revenue
make
right
this
now?"
point. I want to make this point. This
Like
is
it's
the
not
point.
happening right now, buddy.
Wait, I just want to make this point. To what Rango was saying about battery, he gets on an earnings call and he tells you, I understand my business. I understand why we failed this quarter. We have too much inventory here. We oversold this. This is what we're doing to adjust it. This is how Q3 and Q4 look. And I'm being very realistic with you. He could have gone up there and done a bunch of poetry about solar and how we got to like the way that their marketing is to try to keep the stock price up. He's not trying to do that. He's trying to be realistic with you. That gives you long-term confidence, right? That allows people to build thousands of shares because you know the guy's going to tell you the truth. Right? He sees it like he is reporting to you. That is the responsibility of a CEO to the shareholders. I got to tell you how the fucking business is doing. Karp needs to come up there and say the same thing. And if he said before, hey, look, our problem is sales, he needs to spend the rest of that earnings call telling you this is exactly what we're going to do to get more sales. We're going to hire these people. We're going to do this. We're going to prioritize these teams to do this. And we're going to set realistic milestones and achieve those milestones. This is what people are missing. And this is what I don't think
how does a philosopher get more sales?
And
Okay, look, but by the way, but we got to end it now. But I agree with Chris. I agree the valuation is stretched. I agree they're probably thinking
This is
tomorrow.
all S&P,
But
man.
you guys like putting all this negativity on them and calling Carp
Yeah,
an
but
idiot,
the good
that
thing is it
uncalled
doesn't
for.
matter.
That is
It
No,
doesn't
I'm
matter what
not
we
saying
say.
Carp is an
It
idiot.
matters
I'm
what
saying
Carp
why I
says
sold the
tomorrow,
stock.
not
Yeah.
what we say about this, right? So let's
And-
see
and
what
there's-
what he
Yeah,
says.
but
There's
also,
one thing.
you shouldn't. This is what people are being critical of the company to spin that and say you're hating on Carp or to say
No.
that you're being negative. This is not. This is being
You-
realistic. These are
I'm saying
legitimate
why I sold the
concerns.
stock. I don't care about what Carp is doing or not. I'm saying why I sold the stock. It's as simple as that. I mean, and why I own SoFi when it went down to 5.4, it doesn't matter because
Mhm.
Noto, literally every time he came in, beat and guide up, beat, guide up.
I agree,
beat,
and that's a
guide
good
up.
reason.
See,
My
this is what we
only
are
point was
doing.
that they're two
Yeah.
different companies. A tech company and a bank are a little bit. It's easier to predict your loan business versus AI.
Dude, no,
right? That's all.
dude,
No, they
No,
got-
it's not
no.
true.
I don't know
It's
about
not
that.
true.
They got-
You have
hold on. If
ARR,
student loans are
Yes.
starting, you think it's not easier to think, oh, we have a guess on how
No,
much of the student loan
not.
market we're going to
Literally,
capture
government is like
versus how much
putting
of the AI
it's
market
not.
we can take?
No,
No,
ARR
no,
is
dude,
literally
dude,
SaaS has
it's
the
it's
easy
hold
metric
on,
to
hold on. It's a
follow.
management thing. I don't think you see that. It's a management thing. Noto knows how to manage his business and project out into the future, as well as Elon, by the way, for the most part, and as well as Badri. So
but
those
they're
guys
also selling
understand.
consumer
Hold on,
products,
those guys are
guys.
real business guys. They're not philosophers trying to guess at numbers. Okay, that's the difference. You keep missing it. Even if your business is successful, which it might be, I'm not saying it won't. 10 years from now, congratulations. This guy is still not a great operator. 100%
disagree.
not a
I
great
disagree with
operator.
that. I to say he's not a great operator is pretty disrespectful in my opinion. It's
don't
easy
think
to
so.
predict how many app downloads you're
I've
going to
listened to
have.
enough conference calls, not anymore, but I've listened to enough. I've read his stupid letters,
Dude,
and they're annoying, if anything.
Well,
They're
see,
not
look,
good
you can
letters.
call
SaaS
them
is literally
stupid, but you
multiples
got
of
it.
ARR.
Full
if
of
it
no
is that.
data.
No,
The
the
other
last
thing-
app
Companies have the
70
easiest
cards,
metrics
you
to
didn't
follow.
read
You
it.
have ARR,
Yeah.
margin, operating
Yeah.
margin.
Yeah.
Like SaaS is like the literally the
No, but it
easiest company
depends
to
on
follow.
getting-
And it's
I agree.
repeatable, and it's
But it depends on
repeatable
getting-
revenue.
But
Right,
it
it's
depends
supposed
on
to be
getting
repeatable
new
revenue.
customers.
Yeah.
It depends on signing new clients. And I agree with you. Palantir's having a hard time signing a ton
How
of
many
new clients.
quarter? Okay,
But the
ARR
clients
is
are in the
predictable when you
pipeline,
know the
dude, and
client.
that comes up in
Question.
the revenue next quarter. The clients are always in the pipeline for the next quarter. Like this quarter, you don't sign clients for next quarter, this quarter. You sign it like 3 months back or 4
Well,
months
so that's my
back.
point.
It's
That's
always
why
in the
that-
pipeline.
But Rengo, that's why again, if you understanding Palantir a little bit deeper, you can assume revenue could cut off, but increase in customer count. And if you understand their business,
I do
that revenue-
understand they have like a pipeline.
Okay,
they
so,
have
so my
like-
point
like
is,
this-
so my
this-
point is, the stock might sell off because they miss on revenue or they slightly beat, which is why I agree with Chris. However, if the AIP platform, if all that stuff is growing customers, then for the long term, I think the business is in check, and I think that's a
They
good thing.
just came out with AIP less than a quarter ago,
Which is
You
why I
think
wanna
that
see
they
the
had
growth.
that many sales.
Hey,
They're not
how
going to
long-
have
how-
growth. That's the point. It
He
takes
has 10 years
us-
of growth built into his model. He's going
It
to wait it
takes-
out.
it takes-
Let him wait it out.
yeah.
Amit, how long?
And they're selling into a fucking recession. Every company right now is not like, you know what? I've got an extra $50 million to spend on some software that may or may not help me digitally transform. No one is saying that. Right now, the economy is not the greatest in the world. People are laying staff off. The last thing people are doing is saying, yeah, let me listen to some rogue philosopher and bring his software into my ecosystem and my stack and try to figure out how to use it. Everyone is doing layoffs right now. Palantir, good luck with sales right now. Because I guarantee you,
Dude.
look at any SaaS company right now, every single one is getting their asses handed to them on terms
I
of
agree,
growth
but
right
I
now.
agree with all that. I
20
agree.
2017 Enphase had the same problem Palantir is having right now. 2017, 2018. I literally went through Enphase's earnings calls and projections the last 6 years, right? Before like getting into the, they literally had the same problem Palantir is having right now. They had a great product. They had like a great, like everything great, but the operations are so unpredictable and they were not
Mhm.
profitable. And the TJ Rogers came in, fired everybody, put Badri as COO, another dude as
Mhm.
CEO, and then Badri got promoted
Yeah,
as
so
CEO.
I
and
as
the
an
business
investor
became
think Carp,
predictable.
I as an investor think Carp can pull that off. You guys
Peter
don't. That's
Thiel
fine.
needs to come in,
But if he's-
fire
that's-
Carp.
that's-
No, but this was
But
the,
put a whole
yeah,
new-
but this
be
was-
disrespectful
was
to
the
Carp.
argument.
To be disrespectful
No.
to Carp and say he's not an operator, all this other nonsense. That's
I
where
don't
draw
know
the
about-
line.
hold
I'm
on.
like,
Wait,
that's
wait,
just-
but this is
Seriously,
the
I don't have an
argument-
opinion on Carp. I'm
This is
saying
the
what is
argument
the
people are
problem?
making.
No, you're not, but the other guys are being.
Hold
a
on.
little bit,
This is
especially
the argument
Carlos
that people are
Vitale.
making. This is the argument people are making about Disney. They're saying, why bring back Bob Iger? He's the guy that got them into this mess to begin with. If you truly believe that the guy that starts the company isn't always the guy that's best to run the company, especially when the company changes from what it is. I mean, even Bezos left.
All right,
and
bro.
turned it
Whoever
over to
you want,
somebody else.
go let me know. Let me know tomorrow who you want to run Palantir. I'll take it into consideration.
Andy
But-
Jassy. If Andy Jassy took over Palantir, bro,
DJ
I'm in
Rogers.
it.
DJ Rogers.
Frank
TJ
Stutz.
Rogers
Movement.
took over. Hold on.
Frank
TJ
Stutz.
Rogers
DJ
came in.
Frank Stutz.
I would buy
Hold there.
Palantir. I
If
would buy
DJ Rogers
Palantir.
took over Palantir and fired
I'd
half
buy
the
a lot of
people,
Palantir, buddy.
That
You should listen to Carp in the Q1 earnings. I was listening to him today. You should
No,
actually
I'm gonna listen to
What
Frank
am I listening to?
Slootman.
I
I'm gonna
listen
talk
to
to
him
Frank
tomorrow.
Slootman.
No,
No,
I listened
Carlos
to
and
him.
Viction.
Like,
You guys stop listening. You should
All
actually.
right,
listen to
guys,
him.
we'll just see what happens tomorrow. That's cool.
And by the
First
way,
of all,
tomorrow, let me say, I
first
think
of all,
it's fair
I
game.
hope it goes up, and I hope you make money. That's the number one.
No,
thing.
I hope it goes down.
I
and I hope
hope
I get
no.
to buy.
Well, I hope it
My
goes down
average
for
still
you, and I
kinda
hope you
sucks.
lose
hope-
money then.
But
I'm
there's a
buying-
chance it could
I'm
go
buying-
up, but it's more likely.
I'm
than
selling off Palantir tomorrow. I'm buying Enphase because Enphase is so cheap, and I don't want my money to get killed in Palantir tomorrow. That's pretty much it.
when is the call? When is the call? Before or after?
I'll be live 3:45. The call's
Hey,
at
2
5.
p.m. 2 p.m. tomorrow 2 p.m.
You know what, Chris? I might be buying some puts on Palantir to dump it into Enphase when it prints.
All right, we're done. I gotta go take a phone call.
I'm
Everybody,
just saying
we'll see you
this
guys
top,
tomorrow.
the top of the data stack is getting sold off, and this guy's like, "Yeah, Palantir to the moon. Good luck. Good luck."
Wait, hold
Bye,
on,
guys.
hold on. Before
That's right.
you guys got to stop mischaracterizing me. That's I'm not.
No,
saying
I know.
Palantir to the
We're
moon.
not.
All right,
All
give
right,
him,
all
give him,
right.
give him
tomorrow.
tomorrow.
It
Give
is
him
joking.
Till
I don't
tomorrow.
want people to think, because I've been saying this literally for 3 months, that
Yeah.
I thought 12 was overvalued. So I am not the guy right now. Like some of
bro,
these.
you are about to get.
Dude,
You're about
No,
to.
hold on. No,
you're
I,
about to
I'm not
get
about
so
to get
hate.
anything because I've said this on every live stream every single
I
time.
mean, didn't I send you a message with bull case of the Palantir for the next 4 months at like
Yeah, you gave me a
$10,
bunch of stuff.
$11?
Mhm.
I
Yeah.
want to be very clear. The valuation is overvalued given the growth rate. And I do not want to be like any of these idiots on YouTube that are starting Palantir channels saying Palantir to $700 or whatever because they think they get clicks. I've tried to be as objective as possible, saying if the growth is not there, this valuation is unsustainable. However, my problem with everything you guys are saying is it's disrespectful in an ad hominem basis to one of the most, I think, visionary business leaders in the world. And that's what I have an issue with, not the valuation discussion. The stock could drop tomorrow. I don't care.
What
Saying
is-
Carp
what-
is an idiot? No, that's
Wait,
I didn't say
what
he was
is-
an idiot.
what-
I never
wait,
said that.
what
He's a
is-
smart dude.
He's a
You
very
billionaire.
smart guy.
I mean,
You
he's
said
not-
all-
Hold on.
Implied
Being
whatever you
a
guys
smart
said.
guy. Hold on. Being a smart guy and being a bad business operator are two different things. He's a smart guy.
Yeah.
A bad business
All
operator.
right, I actually got to
Totally
go. I
different
actually got to
things.
get a phone call. So
Real,
I gotta
wait, real quick. What is Palantir's fair valuation?
I would look
Not 40 billion?
If,
No, wait, let him
if they
let
do
him answer, let him
15% year-over-year growth, you could argue 9 to 10 is fair. If they get to 2025, you're
$9 to
looking more at
$10?
13 to 16. Yeah. So
9
at
to
20,
$10 or
I
9
think
to 10 billion?
no dollars.
10
dollars. 9 to
Market
10
cap,
if they're
market
doing
cap,
this.
market cap.
Look,
Oh, so he's
that's
saying it
20
should
billion,
have by.
something like that?
He's saying it should be like a
No, I'm
75%
just
discount
curious.
coming
I'm just
up.
curious. What do
no,
you
seriously,
think?
if they're growing 12% year-over-year, yeah, it shouldn't be worth as much as it's worth right now. Probably worth more in the $12, $13, $11 range. If they grow at 25, 30%, as they said, this valuation is fair / undervalued given the AI hype. But they've got to get those numbers, and I don't know if they're going to get those numbers, and so we have to see.
Closing thoughts. Good median SaaS company trades at 8 times ARR and 25% growth.
I
That's the
agree.
baseline.
Yep.
But granted, a lot of them are overvalued right now.
Yeah.
Snowflake's at
Hold on.
25,
What is
like a lot
Palantir
of-
trading at? I don't know.
Palantir's at 20 times
I
price of
think
sales. So
20
No,
times
ARR.
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 Expensive.
What is it?
I don't know the ARR.
I think
20 times.
ARR. Yeah.
Oh, it's trading at 20 times.
Because
Okay,
there's
actually,
been
I
10%
actually do have to
growth
go. I
the
really
last
got to go
year,
now.
so
So we'll
Okay.
talk
Anyway,
tomorrow.
we'll talk tomorrow.
All right.
See you guys
Bye,
later.
everybody.
Hope
Bye.
everyone's well in Palantir. Bye.
Bye.